Hi, this is Randy Finney with Right Side of the Chart. This is an early session update for Tuesday, October 1st, 2019. I want to do a quick update now and maybe reiterate or communicate if I haven't done so lately. It's still not a conducive market environment to swing trading. So if you're wondering why the swing trade ideas remain light, this is why. We're in a very precarious posture on the markets. We're flirting with those key uptrend lines I've talked about that were, intraday broken on Friday and then regained, and we're still right above there. So we don't have the sell signals yet, and yet we're in an uptrend without, at least in my opinion, not a lot of upside potential. So therefore, anything with all the indexing we've had in recent years, really within the last decade or so, as you guys, if you're not aware, if you're new to trading or investing, there's just been a tremendous shift in the past decade or so from actively managed mutual funds, where a fund manager picks the best looking stocks, buys and sells, gets rid of what doesn't look good, buys what looks good, and tries to beat the market. And that gave way to index investing, and that's whether it's QQQ, an index ETF, the S&P 500 index funds. It's probably what's most of your 401ks, and even those funds that are actively managed, a lot of them are pretty much quasi-indexed anyway. So where I'm going with that is, most stocks, unless they're niche stocks like lithium, I highlighted one of the lithium stocks that I covered in the video the other day. Here, let's take a look at that just to kind of kill a couple birds with one stone today. This one, I said it popped earlier this morning. It opened above there, but I said we need to see volume come in, and we need to see the stock continue to build on the gains. It hasn't done so yet, but it's on the verge of breaking out. Now, why did I pick this one? Well, number one, it's still a potential setup. That's not a any more a buy signal than the intraday breaks the other day were on the equity markets. But this one probably has, it's probably not a component of the S&P 500. I didn't check, but most of these lithium stocks, they march to their own drumbeat because they're not heavy-weighted components or components of all of the major indexes, especially the large caps. So these things like this I'll look at and trade. But as far as most other stocks, your IBM, your Apple, Microsoft, and even companies down the line, they're going to ebb and flow with the broad market. So let me go back to the charts and just take a look at what's happening today. Probably the most important development, and this is why I wanted to get the video out, is we had a breakout today on QQQ. We had those downtrend lines I was watching on the 60-minute chart. I was favoring a thrust back within the wedge. We didn't get that in the overnight session. However, we still have the trend lines intact and in play right now. So this is how it looks on a 60-minute chart. Let me go back to the 15-minute chart. So what happened today? We gapped up. That's why you had the big run after the open. That was a technical breakout. QQQ, as you can see, hit that trend line yesterday and the day before, traded on it, gapped up. So with the open, the buyer stepped in, and we ran right up to that previous reaction high. Should have had a line there. Put it right there. You can see where it stopped now. That was resistance. I should have had that line earlier on my QQQ chart, but what I did have and what I did post in the trading room today, I posted 4 charts. One of them made it to the front page, and then I'll work to cut back a little on the active trading stuff on the home page, because that's mainly for swing trade ideas, general market analysis. I know the majority of people listening to my voice right now are not active traders, so I'll keep that in the trading room. And so this morning that one was posted there, and as I said, we had pulled back. We were a little overbought, pulled back to both trendline support and that 77.92 support. So that was an objective area to go long for a bounce trade with a stop somewhat below. And then the next chart I posted this morning in the trading room, this is screenshotted at 9:33, said looking for something along these lines. Zigzag, work our way up here. Remember that head and shoulders pattern on the 60-minute charts of NQ that broke down recently? That's it right there. There's the neckline. It's a trend line. In addition to just being a neckline, it's a trend line, of course, uptrend line. There was our breakdown, head and shoulders pattern. Pretty much met, I think it met the measured target or close to it. It came in, back tested a couple times, and so again, that's a natural target, and I really liked it because it also lines up with that 79.44 resistance level right there. So that's where I had us going before a breakdown of the trend line. And again, that was earlier today, right after the market opened, 3 minutes after the market opened. Next one said boom, 78.44, and the neckline effectively hit close enough where reversal's likely, had us going on to break out below the trend line at that point. That would give us a near-term sell signal. Coincided perfectly with the ISM. Like I say, I am a firm believer that the news, whether it's fundamental news, any other news, there's just this unexplainable correlation, and maybe it's not so unexplainable. Maybe if the ISM didn't come out, then we would have reversed, but it wouldn't have been this impulsive. Or maybe if we hit that level early, let's say ISM came out at 10, let's say we would have done this then, floundered around under that level for a little bit if it hit it, half an hour earlier and then come down. Either way, it doesn't matter. We reversed right on cue, right there at that punch up to 77.44 in the neckline, maybe a hair early. I always say step in short, shy of a resistance level in case all the traders are looking at that level. And you had dual intersecting resistance levels, so perfect, boom. And then, and why I'm doing this video, I think there's another opportunity to reverse. That's what I did. I reversed again. Because we'll probably have at least a bounce off this. So what I'm talking about here is a back test. Now, the thing about it, if we don't get it, no big deal. You have support just below 77.54, good support level, and so that's where my stops will be on the reversed along here, because you have, again, here's your downtrend line on the 60-minute chart of NQ, well defined. That's where we broke out, and we're back testing. So looking for a pop up here, and again, active trading stuff, 77.89, and then at that point, probably reverse again, because ISM, what I see going on, and I've been talking about this for gosh knows how long. I see the ship is slowly turning. I view the economy doesn't turn on a dime, especially when the Fed just continues to throw everything they have at it. What it is the economy has been rolling over. It's like a super tanker. Those things, if you drive a fast boat, a ski boat or a fishing boat, you could pretty much turn on a dime, make a pretty quick turn. These tankers, they take a long time. They have a very slow turning radius, and that's what I see the economy doing. That's what the ISM number coming in contractionary, well below 50 today. I think somebody said 47 or so. I haven't even checked it. That's what was the helped get that reversal going to the downside. But either way, so where am I going with that? All right, so this is a level to watch. It is back testing. I do think we get a bounce. In fact, we've already here. Let's look at the live chart. Forget about these charts from earlier today. Let's look at the updated charts. I also posted this one in the trading room at the same time. There's that QQQ was back testing that trend line, and we're going to at least get a little bounce off there. Buyers are going to step in. How far it might go? At least I think up here, right here. Nice resistance. Look, and if you just to make clear, this helps in trend line. This is what I see when I look at this chart. I see a lot of reactions on that level. I see a big old gap. That's a natural target. So now if we don't get that, we don't always get what we want, then what you want to look for is a break below this trend line. There might be some more selling coming today with that sour ISM number, and if so, you want to look for a solid break and 60-minute close back down below that trend line. Why? That'd be pretty bearish. That would be what we call a false breakout, aka a bull trap, aka whipsaw signal, whatever you want to call it. What happens there is traders go long on the breakout. Then when they realize they're long, they start to have their stops hit, those that went long. Once a breakout fails, then they tend to pile out. Shorts pile in. They smell blood in the water. And let's look at SPY as well. SPY had two alternative trend lines, this one here and then this one. This was the one yesterday I said that's the one we should focus on. That one, we do have a breakout in SPY, and we've already failed that breakout. So this doesn't look good. And as I do this video, I'm now thinking, looking at SPY, looking at everything else. Normally I'd spend the last 10 minutes, including this time, studying these charts. I try to get these out to you guys. But what SPY did do, I'm going to give my, I think I'm talking active trading, day trading stuff again, which I may be out of before I, end this video. Give it a little more room. Why? SPY came in, although it failed to break out, it made a backfill of that gap, and the buyer stepped in there. So just like QQQ, we did have a bounce off support. It didn't happen to be off trendline support on SPY, but it was gap support and price support, which is a pretty good level for the buyers to step in if they're going to, and they did so far. Not a lot, but here I still favor at least this. And that's all I want to get out of that. I'll probably reverse short again there with a stop somewhat above. And what I was getting at for you swing traders, look for a solid breakback below here because QQQ hasn't failed yet. And to me, even though the S&P 500 is quote unquote the stock market and it's a much more diversified index and more stocks, more sectors, less concentration in tech, tech is more important to me, and so is this index right now. So but SPY right now I'm just viewing as a gap back test. QQQ, I'm watching this trend line. Should we fail, that could have some near-term bearish implications. And again, as I started the video out, I've been saying we're only one bad day away. What I mean by that, I want to make clear, it doesn't mean I'm saying tomorrow we break down. I'm saying one bad day away from breaking down means any drop. A bad day in the stock market is let's say a 3% plus down day. That's pretty much a bad red candles. It can certainly drop more, but that's a bad day. So you get one bad day could take us down below those trend lines on QQQ, XLK, and everything else. And it all starts with these shorter term time frames. You want to try to glean a little insight to where the market might go. Well, let's see if this breakout sticks. Because right now, again, all we have at this point, although it was a pretty impulsive, reversal at 10 a.m., all we have at this point is simply a breakout with the gap up today and a back test. And TA 101 says you buy breakouts above resistance or you buy pullbacks to support. That's pretty much it. Anything else in between is not so objective. And when you do that, when you buy pullbacks to support, it's easy to keep your stops a little bit below there. And again, now it all depends on how much you're going for. If you are of the belief the market's going to new highs and well beyond, or even if you're trying to play that marginal new high scenario I talked about with another 5-6% upside from here, then yeah, you go long here. Let's say your target 6%, you can use a 2% stop loss wherever that is, probably down here, and you're talking a 3-to-1 risk reward ratio, which is favorable. So anyways, those are the levels I'll watch. Let's get back to let's look at the futures real quick. And no, that's silver. That's another trade idea posted this morning. It's running nice. Remember, it broke out and all this stuff. It's not coincidental. It's you had the silver falling to support. Well, actually, silver reversed before the markets hit resistance today, but this chart on its own is bullish. I don't always trade these in lockstep. They don't always trade in lockstep with the market. Typically, the risk-off assets, gold and silver, will trade inversely to the market, but not always. And again, this is objective right here. That's a very, very good support level on silver. So that was mentioned yesterday as objective buy level number 1, with the next buy signal coming a breakout of the trend line buy number 2, and 1740 or so is the first resistance. And how far we go, whether we go past that to the next target or even beyond that, will most likely depend on what the stock market does now from this point. So if the stock market holds this support, rallies, then probably that's all we're going to get in the near term. That's 17,404. If that breakout in QQQ fails with conviction impulsively today, then you probably see more upside there. Since I hit on that, I should probably cover gold as well. Gold's starting to crack above the downtrend line. Pretty impulsive candle just to get there, and it will most likely struggle with that 1492. So if you took gold, there were two opportunities, both yesterday and today, both highlighted, to buy gold here at the 1468 support for a bounce trade. That's probably going to be some pretty formidable resistance around 1492, because it was very important support. Once that support gave way, impulsive move down. So near-term stuff. But should the stock market just go kaputs here, keep going down, gold could power on through there. So how do you play that? Well, one thing I like to do is, if I'm expecting a likely reversal there and I don't want to give back profits, I'll just tighten stops up. Instead of taking profits at just shy of 1492, what I'll do is if it gets to say 1490, I'll put a stop in. I might give it a few points. You gotta have to give some room. These markets are volatile. If you run a very tight stop, they're just going to clip you in the noise. So you can then set a stop. So you might be willing to give back a little bit of the gains, but keep you in the trade. It's the old rule. The old rule in trading and investing is cut your losers and let your winners run. And so, again, my analysis on this is dynamic, contingent on what the stock market's doing at the time. Finally, since I threw it out as a trade idea, let me follow up on natural gas. We didn't have the impulsive breakout. Remember, I said you need to see an impulsive breakout, and that's anything but. It popped its head above that trend line briefly and went right back down. So that's not a impulsive breakout nor a 60-minute close above the trend line. However, I said nat gas, DGAS. I know a lot of you guys like to trade DGAS if you don't trade the futures. UGAS, I'm sorry. UGAS is the bullish one. And I mentioned it had some support, pretty decent support around 13. We're getting close. There it is. There's the support line around 13. We're not there yet. No divergences on this chart, but go back to that NG chart, and we have some pretty strong divergences that have been building, and I can see support right here about 264 on that gas, so it might be worth a shot there. In fact, I think so. Let me see if I can actually bring in a trend line that might come into play. No, that would already be taken out. All right, I'll wait for some evidence of reversal. I'll tell you, I'm probably going to take a shot here in a second. I'm going to put an order in to buy it just above that level with a stop below, and I'll monitor that trade close. So that's what I call pot shot trade. Not going to add that on as an official trade because I don't have the highest degree of confidence. This thing's clearly in a downtrend, and divergences, like I always say, are not a buy signal, just an indication that a trend reversal is likely. Your best buy signal will come on a break of this downtrend line right here, the same one I mentioned this morning, or some type of bullish candlestick reversal pattern. So we'll watch that one. And that's it. I wanted to get this out to you. And again, if you're a swing trader, I know everything I'm talking about here, all these, starting with that back test of the trend line, pull back to the trend line this morning. And I told you my convictions weren't very high. Still aren't very high. I'm trading light. I'm not trading, a lot of contracts NQ. I'm just trading off the, it's acted well. And again, that goes back to that post I made this, all the posts, these are all the charts in the trading room. When I say it's acting well to the technicals, that's what I'm talking about. You have, uptrend line, pull back to a trend line. That's always an objective long, a trend line support. And then you have a rally into resistance, followed by a breakdown of the trend line. That's objective short entry 1, break of the trend line's objective short entry 2. When it hit there, updated it, and then right after that, from that point, that was the high, literally right there, and boom. And again, back test, a pullback to support, game of bounce trade, and like I said, I'm a little, I'll reverse there. But not going to give it too much room. It should remain above there. Otherwise, we could have a successful backtest and continue to rally, and that's why I'll keep relatively tight stops somewhere right around there. That tip of that finger is right there. All right, and let's just wrap it up here. I guess that's it. There it is, right there. Still testing that 77.54 and trendline support. Nothing's changed since I started the video. Same 60-minute candle. That candle won't be finalized for another 14 minutes. So we'll wrap it up here. And if anything stands out other than what I've already highlighted today, I'll try to get it out to you guys. This has been Randy Finney with Right Side of the Chart. Best of luck on your trades.